Warning, crisis averted? Not so fast. Welcome to Momentum Property Education, where we share with you what is going on with the economy and how to grow your passive income so that you can live your dream life, the one you deserve. Last week, we did our weekly finance update where we shared 6 main factors that were right now pushing the market into a crash. Now, one of those has been temporarily averted, the U.S. debt crisis. So we're going to talk more about that. But that wasn't everything that was on the horizon. So we're going to take a look today around the global market to see where are we going, and more importantly, to see what do you need to do as an investor. So one of the things we stay away from here at Momentum Property Education is giving you a market prediction. I'm not going to tell you the market is going to crash or the market is going to go up or by this much or in this time frame. What we want to do is we want to give you what are the factors playing a role, but then think of the markets, instead of thinking of the market as a win-lose, right? Either it goes up and I win, or it crashes and I lose, or vice versa. Think of it as a coin flip, right? So you flip a coin. Now, a coin can land on either side, win-lose, right? But there is a third side to that coin. It can land standing up. Now, that isn't very usual. Most investors land on one of the two sides. But our job is to be that one coin that lands on its side so that no matter which side it then falls to, we win. That's what we try to help you with here, to make sure if the market goes up, you win. If the market crashes, you win, and to be ready for both. That's why we have our passive income show every week. That's why we do the finance update, and that's why we interview some of the top investors in the global markets to make sure you have the latest updates. So please make sure you subscribe to our channel so you don't miss any of this, so that you stay safe, so that you keep growing, so that you reach your goal. And if you would be so kind as to like this video, we would really appreciate it. But even more, for each like this or any of our videos get, we plant a tree. We have a partnership with Eden Reforestation Project, and for any like that any of our YouTube videos gets, we plant a tree. So every month we plant thousands of trees together with Eden, which is a real honor. So please be a part of that and click that like button. Now, let's go into these 6 factors and look at what is going on and what can you do to stay safe. All right, so we're back at the whiteboard. Let's look at these factors that have been affecting the market. Here are all 6 we looked at last week, and we're going to break them down one by one to see what is the effect going to have going forward and what can you do to stay safe, whatever happens. All right, so the 6 factors we had were lockdown, right? We got lockdown globally. We have the global trading crisis with the challenges in trade. We have the energy crisis that's coming. We have the U.S. debt. That's what we looked at last week. We have the growing issues in China around the Evergrande scandal. And we have global inflation. So let's look at all these 6 one by one to see what is happening. All right, here we go. So first we got the lockdown. What is going on with the lockdown? Well, overall in the world, lockdown is opening up, right? The markets are opening up, we're able to come out, we're able to do things. But where the risk is and this is great for the economy, right? This is great. You know, businesses are getting to transact, people are coming out, they're spending their money. A lot of people saved a lot of money during the lockdown period. So coming out now able to spend has been great for the economy, but so is the growing number of cases, which means that will lockdown come back? That will have a huge impact on the economy. So we will see. Right now it's looking good, and this is driving the growth in the economy. We will see where this takes us. Our second factor is trade. Now, what's going on in the trade market? Well, the big issue is that there are a lot of shipping constraints. Because of fear of spread, they are cutting down on the amount that can be shipped. The factories are working slowly, and this has caused a huge problem in delivering goods and services around the world. Now, with lockdown opening up, people wanting to spend, people wanting to get out into the economy, that has exasperated this issue where the supply chain isn't able to keep up with the now growing demand. So we will see how this continues, but this is one of the factors that is slowing the growth. So this in itself is not going to create a crash, But what's happening is when people are coming out of lockdown, they want to spend. That drives growth in the economy. And then these shipping constraints are not allowing people to buy. And what does that do? If the demand is growing, but the supply is shrinking, yeah, that creates inflation. And we'll get to that in a moment. So next, that's not it, right? We got more things going on. I apologize for my spelling. That's supposed to say energy. So energy there's a lot of factors that are played into this, but there is a huge energy crisis going on. There is a lack of supply of energy. This has come from a lot of different factors, right? It started with lockdowns, so that factories haven't been able to deliver. There have been factory malfunctions that have not allowed things to deliver. There have been environmental, weather problems, and of course, it's now being exacerbated by Russia, who are now keeping a lot of their gas from going into Europe, which is causing huge troubles in Spain and even in the UK, who's not actually very reliant on Russian gas because of the feed-through effect. So this is causing rapid rises in energy prices, further pushing inflation. So we'll see how this plays out, but that is what's going on. An energy crisis into a market that wants to grow, that wants to expand, that wants to consume, it slows down that consumption. It slows down our economic recovery. And that is a big problem right now. So those are some very, very important factors. Our big news last week was the U.S. debt. The U.S. debt ceiling was under a very big dialogue, right? The U.S. was at risk on the 14th of October to run out of money because they could not agree on raising the debt ceiling, right? The Democrats wanted to raise the debt to pay bills, and the Republicans didn't want them to. Now, the U.S. keeps raising its debt ceiling. I think it's 105 times now in U.S. history that debt ceiling has been raised. And now the Republicans try to stop that from happening, but 10 Republicans now went over party lines and helped the Democrats raise the debt ceiling. So is that a good thing? Well, short term, yes. Short term, this is really good because short term, it means that the U.S. is not going broke. And that is good. That means they can pay their bills, their credit is not going to go down, and they can keep the country open, right? But the U.S. consistently raising debt 105 times in its history is not a recipe for success. That's like every time you max out a credit card, you just apply and get a new credit card, and you use that to pay the old one, and then you use the new one until you fill that up, and then you apply for a new one, and then you pay off the old one, and then you use that until it's filled up, and then you apply for a new one, and you keep doing that. That is not a long-term strategy for financial success. You want to have smart debt is fine, right? If you have debt that actually makes you an income, that's fine. That's what we do as property investors. But we have to be smart about it. We can't over leverage. And that is what the US has been doing for the last decade. Now, Republicans will point to the Democrats and say it's their fault. Democrats will point to the fact that Trump raised the debt ceiling because he racked up debt. No one's doing it right? They're all racking up debt for different reasons. The global crisis has exacerbated it. And what they're now doing to solve this debt crisis is they're printing more and more money to get that paid. Well, is that a good thing? More and more money being printed. I think it's 25% has been printed in the last 18 months. Of the entire US dollar supply has been printed in the last 12, 18 months. That is incredible. That is not okay because that is causing a decrease in value of the dollar, meaning inflation. We'll get to that point again. All right, finally, China. What's going on with the Evergrande scandal? Well, Evergrande, the largest property developer in China, has missed out on 2 payments on its bonds, and it looks like it's going to miss out on another $150 million payment to its offshore, meaning international bondholders, people that have lent money to the company. That is a big, big problem because what Evergrande is doing now, they are paying some of their debt, but it's all Chinese debt. They're paying onshore, they're local investors, and they're right now stiffing their internationals. That is creating a very, very amount of pressure. Obviously, China is trying to protect their own there, but
that will stop the flow of new money into the Chinese market. Now, Evergrande isn't alone. There are other companies that are now late on their bond payments to international investors. This can have a huge knock-on effect. And the China market, what's happening is already had a knock-on effect. The US market had a crash, a big dip because of this. The Australian iron industry, which is one of the key industries in Australia, is having problems because of the lack of now building and the export demand for it. So there's a lot of things that are coming out of China. They look like they're trying to wall off and protect so this doesn't collapse their whole economy, but it might mean stiffing international investors. So we'll see where this leads. Finally, we got inflation. This thing that all these other things have been pouring into, inflation, hurting the market. The US inflation is predicted to be at least 4.2% in 2021. That is way above the 2% target that we try to have in the Western world. So inflation is going up, and I believe that's going to keep going up because of the amount of money that's been pushed into the market. We will see. So what do you do as an investor? Well, if inflation happening, that means that money is losing its value. You want to acquire more assets. Now, because of the fact that other things might be dropping, we don't know. It's going to be really, really hard to predict what the right call is right now. You got to be smart. You got to be careful. We're going to keep you updated every single week with what is going on. So make sure you subscribe. Keep yourself updated. This is what's happening. Be smart, be careful, stay safe.